Hi, this is Joette and Jen with KEILY, Mira Law, and today
we're going to be talking about buyer's closing costs. So the top 6 categories of fees that you can expect as a buyer when buying a home. And the first really are home inspection expenses. So as part of your contract, you can designate whether you're going to be having certain inspections, whether they be a standard home inspection, radon, termite, etc. Well, if there's a well on the property, septic, if there's a septic system on the property. So these are all designated inspections that you can elect as part of your contract, and there are fees associated with those inspections, which are typically entirely borne by the buyer. So that's the first category of expenses you can expect.
The second category is lender fees. So that would include your points if you're buying your interest rate down, your appraisal fee, your origination fee. Any lender fees are included in that, as well as mortgage insurance. If you're getting an FHA or a VA loan and you're going to pay an upfront mortgage insurance premium as a part of the loan, that is also included in the category. Your credit report, your flood certification, checking your taxes, all of these fees are going to be charged to you by the lender as a part of your closing costs.
And often you get what's called a loan estimate from your mortgage broker or the loan officer that's working with you on the loan, and it'll itemize all of those expenses. You know, typically an appraisal is around $450, and flood certifications are about $10 or whatever it may be. So these are all itemized on a loan estimate, which is provided to you after you submit some basic applications with a loan officer.
Exactly.
And the third expense are once you get quotes from a loan officer and you kind of get the ball rolling, your inspections are done. Now you're really going to be looking at hiring an attorney, and the attorney is going to start by looking at title. So the third category are title related charges. The first thing that an attorney is going to do is pull a title search. That title search is going to show any liens or encumbrances that affect title to the property. So if the seller you're buying from has a mortgage, that's what will come up on the title search. And typically, title searches can range anywhere from $100, $150 to over $300, depending on the way that title is held. For example, if it's probate, or if the property's been recently foreclosed and you're buying from a bank, there will be different types of searches that we have to run. And there are also other searches in other parts of the state that are very commonly used, such as municipal searches. So checking that there are building permits or that there are no code violations. All of those can really increase the expense of a title search and be part of that title review process. There's also title insurance that is part of this category of expense. Title insurance can protect both the bank, that's the lender's policy, and the owner, the new buyer, which is the owner's policy, against any undiscoverable title issues at the time that the title search was run. So it lasts the lifetime of your ownership in the property, and the amount that you pay is actually based on the purchase price of the house and how much down payment you are putting down. So the more money that you invest in the property, the higher your owner's title insurance premium will be, and the higher the loan is, the higher the lender's premium will be.
So it's not negotiable?
Really? I don't know what that means.
So you can't negotiate your title insurance policy. It's based.
Oh, I was like talking about.
So it's not negotiable. It's going to be the same wherever you go.
Yes, okay. No, it's not a negotiable amount. It is a set price. It's a formula that's based on a set price. So all the title insurance companies charge the same amount for whatever premium that you're going to be getting.
The fourth category that you'll incur as a buyer is attorney's fees. Now that can range across the board depending on how much your particular attorney charges, or sometimes how much your lender will allow an attorney to charge. Depending on who you are obtaining your mortgage from to buy your house, some lenders have set fees where if you have an attorney who is an approved attorney with that lender, the lender only allows that attorney to charge a certain amount, including to the title search fee that Jen was talking about. And all of that will be included in your loan estimate that your loan officer provides to you at the very beginning of the process. So you will know exactly what to expect. You'll also have recording fees, and typically as a buyer, you're going to pay for the recording of the deed from the seller, and that is $60 for the first page and then $5 for every page thereafter. you'll also pay for the recording of the mortgage. And that document comes straight from the lender. It is $60 for the first page of mortgage and then $5 for every page thereafter, and then an additional fee if it's a MERS mortgage.
And just going back to attorney's fees, it is a set attorney flat fee typically for general purchases, just as it is for sales and representing a seller. So it is a flat fee. There are just some lenders that cap what those fees can be.
And if you're getting a second mortgage, like if you're using a down payment assistance loan or you're doing some type of grant through the city for where you live, and that constitutes a second mortgage, or even if you're just getting a second mortgage in general in order to purchase your home, those are going to have their separate recording fees as well.
Okay. The fifth category are prepaid items. So there are some things that you're going to be required to pay in advance that are you're paying for into the future. So for example, you're going to be required to pay the entire annual premium of your homeowner's insurance up front when buying the house.
For the first year.
For the first year, right. So that whole year is going to be paid up front, not just the first month or the first 6 months. You're going to be paying for the whole year up front. You're also going to be paying mortgage interest from the date of closing through the first day of the next month. So for example, if you're closing March 15th, your first mortgage payment, you're going to skip a month. So your first mortgage payment isn't going to be until May 1st, and you're going to pay interest from March 15th through April 1st. And then you'll be paying the interest from April as part of your May payment. So you'll be paying that mortgage interest in advance upfront for the last 15 days of the month of March. You're also going to be responsible for putting money into escrow for the payment of taxes and insurance in the future, or mortgage insurance if you have mortgage insurance as part of your loan. So what escrows do for you is it allows you to budget essentially for those future payments. And you pay the year, for example, with homeowners insurance, you pay the year up front, and then starting, as in our example, if you're closing on March 15th, starting May 1st, a portion of your mortgage payment is going to go towards escrow. And the escrow is going to be for 1 month of taxes, 1 month of homeowners insurance, and 1 month of mortgage insurance if you have mortgage insurance as part of your loan.
It could be more depending on what your lender requires.
Correct. There could be other taxes that are part of that as well if that's what your lender requires you to escrow for. But on a basic level, you'll be paying escrows towards insurance and taxes or PMI, private mortgage insurance. And every month those payments accrue, and then the bank will have enough to pay off your bills when they become due. So annually for your homeowner's insurance, the bank will then pay them for you, and semi-annually if your taxes are paid semi-annually, as they commonly are, they will be paid by the bank from the escrow. So that money in escrow always belongs to you, but you do have to start the account with something. So that's part of your closing costs, which are quoted to you on your loan estimate. It will be how many months do we have to put aside in escrow as a prepaid item.
The sixth and final category is for adjustments. If you are purchasing a property in a town where the taxes are paid in advance, then you will be reimbursing the seller for the taxes that they've already paid at the time of closing. So for instance, if we are closing on March 15th and the seller has already paid the January tax bill, then you are reimbursing the seller from March 15th to the end of June 30th. And then your next tax bill would come out of your escrow account on July 1. Same for the water. If there is a credit on the water account, you'd be reimbursing the seller for the water. If there's oil or propane in the tank and that's how your home is heated, you'll be reimbursing the seller for the remaining oil or propane in the tank. If you are buying a condominium and there's monthly condo dues and the seller has paid the monthly payment for that month, let's say you're closing March 15th and the seller's already paid for the month of March, you'd be reimbursing the seller the prorated amount. So if it's $100 a month and we're closing March 15th, you'd reimburse the seller $50. And then your next monthly payment would be April 1st. If there is rent or security deposits, if you're buying a property that is being rented, then you need to reimburse the seller for the prorated amount of rent if the rent has already been collected. If there's a security deposit, you would, as a buyer, actually be receiving that as a credit from the seller.
And the important thing to keep in mind for buyers are that the majority of these 6 categories of fees are included on your loan estimate when you first apply, with the exception of really tax adjustments or any of these adjustments that Joette was just talking about. Because oftentimes, I mean, there are some lenders that do include that, or at least disclose to their clients, hey, you're going to be giving money back for prepaid taxes or prepaid condo dues, but not very common. So I would make sure to, if you don't see adjustments for those types of prepaid items on your loan estimate, to make sure that you talk to your attorney about giving you an estimate so that you're not surprised in the end about the additional oil cost or the additional propane cost, because those can be pretty substantial and add to the closing costs that you're anticipating paying. There's also a trend these days, because of the number of expenses that there are for buyers in buying a home, to be asking for closing cost credits. And that's going to be part of another video that we're going to do for you, because there could be credits that you ask for from the seller as a result of inspections that you have that are not favorable, and you're asking for money back towards certain repair credits. That happens. And then there are closing cost credits that you can ask for as part of your initial offer, or that can be negotiated after the initial offer and added to the contract to kind of help offset these closing costs and prepaids. So those will be the subject of another video that we'll have coming for you. So thank you very much for joining us, and please check out our other videos.
Thank you.
Thanks.